me personally, that is not concerning because I know that the daily chart tells me that we are weak. Multi-day level support has been broken. A lot of longs are getting sold out, and the stock is more likely to go below yesterday's low.
Hi everyone, Simon and Eamon here. We're coming at you live with another example in the stock trading simulator. So running through some of our weekly homework, some trades that were taken over the past week, and we've prepped an example today that's an excellent example of the pinpoint strategy, looking for key levels, building a bias off larger time frames, and it's off one of the trades that Eamon actually took earlier this week. But before we head into the trade and actually speaking about GM, just a couple things I wanted to point out. So obviously, if you guys aren't already subscribed to our mailing list, head to stocktradingsimulator.com, head to the bottom right corner, click the little mail icon, and subscribe to that mailing list. We'd really appreciate it. We send out weekly homework. Basically twice a week, you'll get an email from us with different trade ideas, trade strategies to practice. And then on Fridays, you also get a summary and a link to this video. So stay tuned there. And then the other feature, be sure to leverage the Twitter share feature there that you'll find in the top left corner under the URL bar on your browser, being able to share all of your replay practice, all of your stock trading simulator practice just directly on Twitter. If you have any questions about your trade, obviously feel free to tag at Eamon BBT as well as myself at Simon Greganis in your trades, and we'd be more than happy to answer any questions or comment on how you're kind of tackling some of that replay homework. But without further ado, let's dive into GM. I'll introduce kind of the daily 60 and then I'll hand it off to Eamon. So taking a look at GM specifically on the daily, you can see that around that $65 level, there was a previous swing high on the daily chart from about mid-November that was pierced and then failed on volume at the beginning of 2022. Since that standpoint, we've actually been in a little bit of a downtrend within the scope of that larger daily channel. We see a bounce off of the 50, the 9, the 20, see some confirmation wicks, some hammer candles, and then actually a failure and breakdown now below that bounce of where those wicks are. We have a great confirmation candle yesterday, so it's closing a red day, so it's giving us that bearish confirmation bias, piercing that previous swing low. Given the failure and now the stop out of all of the traders that actually took that position long on the daily chart for that bounce off the 9, 20, and 50. So that kind of sets the stage on the daily chart. When we turn to the 60-minute chart, though, same thing. We're looking for confirmation candles, which we can see there both in the pre-market as well as yesterday close. So you can kind of see two reverse hammers showing some additional selling pressure. If we just zoom out the 60 a little bit as well, you'll see previous support at approximately that price level. Once again, levels aren't perfect. They're going to provide you a region, an area of previous buying, previous selling, and a previous area of support is now acting as resistance. And the actual levels that we'll be marking for our stops and so on will be based off of the recency effect. So looking at those candles in the after hours of the pre-market as well as during yesterday's close. So you can see at approximately 59.60-ish, all the way down to about 59.50 is kind of the area that we'd be looking to enter short on. And once again, it's not that the levels are an exact to the penny area, marker. They're more so an area of selling and buying pressure. So we want to look for a short within that scope, within that area, given the bias that we've formed off of the daily setup and the daily chart. So without further ado, Eamon, why don't you walk us through some of the execution components and educate us a little bit on, leveraging those levels in your execution management on the 1 and the 5.
Thank you, Simon, for explaining it. And that's exactly what I've seen and what I've liked looking at GM on the daily chart and the 60-minute chart. And once we've analyzed the daily and the 60-minute chart, as Simon said, we try to get in somewhere within the area of the level. The level that we've drawn was at 59.58. And I personally try to enter with a tight stop loss just to make bigger reward once the stock starts going in my favor. And this is the range or the area that I was interested in getting into a stock to. Between 59.48 and 59.58. 59.58 was basically my stop loss. And if you get stopped out, that happens. Sometimes you get wicked out. Sometimes the stock just continues going against you and the plan failed. Sometimes it's giving you an opportunity to re-enter. So let's play it and see how we could execute this trade. There it is. It's going up right now, and I'm waiting for the area above 59.48 to get into the position. So now I'm in the trade, and my stop loss 59.58, and I'm holding for a bigger reward in case the stock makes it to 7 hours at least. That's what I usually aim for. If it makes more, then that is better. You could see here we got wicked out of a level, and unfortunately the setup for now failed. What I usually wait for is a new low. Sometimes it rejects some other level. Sometimes it goes a little bit past the level, right? So what I tell myself, if I get a confirmation candle and a new low, I would be re-entering into a trade and having my stop loss at a new high, or you don't really need to use the wicks as your stop losses, something that I have explained in the parabolic reversal webinar at BBT. If you are having a large wick, you could use half of the wick or slightly below the wick just in case the stock tries to consolidate around here. You can survive the small pullback. Now that you are in a position, you try to manage your risk and try to find target levels. Now, as Simon explained, the daily chart looked really weak, and the 60-minute chart gave us the confirmation that the stock is weak. We had the confirmation on the 1-minute candle after we've been weak, and now we're in a trade. Some people will be concerned of the pre-market low or a level from yesterday down there, and they'd want to take partials right there. But for me personally, that is not concerning, because I know that the daily chart tells me that we are weak. Multi-day level support has been broken. A lot of longs are getting sold out, and the stock is more likely to go below yesterday's low. This is why in this trade, specifically, I decided to hold for longer than I usually do, and I held it basically for the 80% of the ATR. The ATR on GM, if I'm not wrong, somewhere around $1.50 or maybe $2. I think it's $1 or $1.50. So what you could hold on to is around $1.20 move at least before starting taking any partials, or slightly more than the ATR if the relative volume is bigger. So basically that is the way I've executed the trade. This is how I entered. You can feel free to partial at your target levels, really tight stop loss, beautiful reward. This is what we usually aim for in these type of trades. It's a riskier style of trading, but if you are good at holding on longer to your winners, it is also more rewarding than any other style. So I hope you enjoyed this video, everyone. If you have any questions, as always, feel free to type your questions in the comment section. Like, share, and subscribe. We really appreciate that. Any comments are also appreciated. It only motivates us to do better. Have a great weekend, everyone, and we'll talk to you again next week. Bye.
Awesome. Thanks, everyone.